Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 9th, 2022. We saw a little bit of selling today. The Bears, every time we got down to the 50-day moving average on the hourly chart, we saw the bulls step in, and they continue to try to defend this line. Now, if they lose it, most likely we're going to have a pretty quick move down to the 40-18 level. Could be a little bit maybe 40, 50, somewhere in that range. But if you look at the fractal pattern, remember, this is pretty much what it's doing. We had our first move up, so that was this. Then we chopped down and up. Here's down and up, down again and up again. And now we're here where it would leave the door open for this last spike up and then down. That's if it's going to follow this. Now, that's the bearish case. The bullish case is that we made a one, two. This is our wave three. We're still going to come down, so we could chop and come down, but not go all the way down, to take out lows and stuff. What it would do is we would chop up, come down, and then hold the 200-day moving average. Most likely, that would be somewhere around that 40-40, and then we have the final wave five up. That probably takes us into the sometime in the August. That's the bullish case. Come September, I really do believe things are going to get ugly. There's just so much stuff going on right now in history. We're living through history right now. We have the Democrats, and I mean, I know they're saying that it's the FBI is just not being political, but I'm sorry, you don't go and raid an ex-president's home for documents that were supposedly taken from the White House, because that's all they had to do is simply just do a subpoena, and they would have gotten whatever was in there. So the first time in history we've seen us raid a former president's house. We have, in the most illegal immigrants coming through our border in history. We have inflation that is at pretty close to historic highs. It will be there by the time everything's done. We have a president that has the lowest approval ratings in history, and right now, the way that they're battling inflation is to throw another 790 billion into the fire, and I'm not really quite sure. It makes zero sense to me at all. I know that some people have tried to explain it. I think they're cuckoo, but in any way, the market knows this, and that's why this is going to be nothing more than a simple dead cat bounce. I do believe that this recession is going to get worse before it gets better, and as we head into the fall time period, you're going to just see this market lose a bid and collapse all the way down, and I believe we take these lows out. But short term, we got to leave the door open for a pull down and then up to make the wave of the final wave five. And it could end here, where we make the wave four right here, but it'd be kind of shallow. So to me, I think a little bit more of a pullback, either down to the, somewhere around this 4,000 level would make the most sense, because we got price support as well as the moving average. So this would be the ideal spot. And if it holds, I would have zero problems, taking a long trade. And even with everything that I just mentioned that's going on, in our country, the market doesn't, will turn a blind eye to it until they don't. And then when they do, that's going to be the only thing they eye down. So, it's something we just want to keep an eye on. If it's following the bearish pattern, then we're going to get another final push up and then collapse down. So there's a couple different ways to do it. That's why I'm saying just put your stop at entry right now. I think even if the CPI numbers are good tomorrow, I don't believe we're going to have a 50, 60 point rally. But I mean, gap higher, but maybe we'll have to wait and see. But even if it was, I mean, you're going to take a 10, 15 point loss. I mean, it's not gapping up 100. So in any case, and if it does gap 100, then I would say don't close out that trade. Let's wait for it to average in up here and then look for the larger drop. So I'm looking at this, if we get a 30 point, 40 point gap higher, then you just leave your stop at entry and then look to re-enter if we take out these highs here. It's just a win situation, because if the CPI numbers come in hot, then you could see us opening up down at the 40-10 level, and then we just close out our trade and possibly look long. So I'm always looking in both directions unless something is really staring me in the face as far as having to to look one direction or the other, whether it be long or short. Right now, it's kind of, I could build an okay case for either side, and that's pretty much what I'm doing right now. I'm not saying the market's coming down here. It would make sense just because typically when we have these bearish divergences, they give us about 100-point drop. So if we got down to the right around that 4090, 4085, it's going to be pretty close to 100. And we're in trade mode right now. So if we take a look at the 15-minute chart, what we're going to see is this is the where things get the final line in the sand. I know this is I showed you the 50-day moving average on the hourly chart. This is the 200-day on the 15. So if it's taken out, there should be a quick move down to this 4080 level. There's a gap open right here at the 4075. Again, that fulfills the 100-point move that the trade that we look for. So the bulls, they're going to really have to get it above the 4050 to sidestep any selling by the bears. If the bears can take out these lows here, don't be surprised to see a very quick move down to the 4080 level. And we have some bullish divergences. So again, stay on the fence. Do not have a very strong side, whether it be long or short right now. Just be open minded. We have our position right now right up here. If it comes down, we start scaling out. If it goes up, maybe we get stopped out at entry. No big deal. So let's see what plays out tomorrow. Have a great night, and I will talk to you guys in the morning.